Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn & Associates with your financial market wrap-up. And this is for Thursday, the 11th of May, 2017, just getting after 4:10 p.m. Central Daylight Time. So we had another rally in all the energy markets. The warm weather that's coming into the U.S. now, and it's really moving through. We're going back into the 70s and 80s in the Chicagoland, but remember, that's coming from somewhere, so it's getting warmer, and that'll head out east, rather. And as that heads out east, you start getting these bids in. So is the bottom in natural gas? Will be a lot of questions, but it's certainly looking like it's an upthrust taking place. Gasoline, crude, the problem there, of course, is who wants to be short in front of the OPEC meeting. This could be the old buy the rumor, sell the fact scenario, almost like the euro did, as it rallied from the 107, 108 level over 110, and then once the French election was done, it had its bit of a sell-off. So those are things to watch. Other events of the day centered in the gold market that impacted it. North Korea said that they are preparing for an ICBM test. That will get the U.S. hairs going up. And, of course, the nuclear test they've been threatening to do again, so you've got that. Then we get to the stock indices. And other than what I call the poster child, the NASDAQ, there are problems in the other indices. And let me show you what I mean by that. The poster child has gone straight up from 45.58.50, the day of the U.S. presidential election, where the market had a dramatic turnaround and kept its overall rally. I mean, you've had a little bit of a sideways action that hit here at the beginning of January and into later March before the next acceleration, which has carried it to this point. And that's the weekly chart. The daily chart of closes, the market for the week is going, for the day is down 475. So as we come back to this chart, for the week you're up 22 points, and that's what I was trying to get at. For the day you're down 475, but you still have an overall good gain for the week. Now when we take a look, you can see how the market's backing off a little bit, but instead of closing anywhere near the lows of the day, the market stays right up there near the day's highs, and it's kept alive the pattern of higher lows and certainly higher highs. That's bullish until you take out 56.0375 on the current pattern. Patterns do change. When you look at the 18-day average of closes, it's gradually climbing up. Now, it's 55.70 today. Yesterday was 55.15, and before that, 55.37. So in round figures, figure somewhere between 10 and 15 points a day it's gaining. Wouldn't be surprised when we reopen, we're going to be in the 55.80s somewhere at that point. And by the close of business tomorrow, we could be very close to this 56.03 level. And that would be for Sunday's reopening. So we close tomorrow, then when you see the first prints on Sunday, you might add to this overall thing without a big move down tomorrow, 30 points in the moving averages over the next two trading sessions. When you take a look at the sideways action, there's nothing bearish on it. The market was in an acceleration mode here into the month of May, and it's had one of these modes that has gone more gradual to the upside, and it has kept its bullish embedded reading. Now, stochastics are an oscillator that could typically travel between getting overbought and oversold. The midpoint of them, let's call in the 50 range. I personally view any reading over 70 is overbought. Any reading under 30 is getting oversold. And when the numbers cross 80 and go sideways like this, I term it from the market moving from an overbought condition to locking in a bullish trade. That's what you have there. You have a different world at work in the mini Dow. First off, look at the 18-day average. You're already there. I'm talking about trying to get 2 days, Friday and Sunday, to get up that 18-day average where it's closer to price. First thing you look at. Second thing, you have a higher high, a lower low. That's not bullish. Third thing, you lost your embedded reading, but when you lose it, all that the market does owe you, in my opinion, is the 18-day average of closes, and it's exactly where it went today. So I've got to call this market losing its uptrend in terms of swing line. The bias is up because you're over the 18-day average, but momentum has turned down. Pretty confusing story. When we go to the E-mini S&P 500 index, again, you've lost your embedded reading as of today. A big rally tomorrow in both the Dow and the S&P would get the markets re-embedded, and I'd go back to the drawing table and say, aha, they stepped out of it, they regained it, and now next targets if the market rally would be upper Bollinger Bands in both of those markets. But you're not there. You're at the point where you've just lost this. Like the Dow, the market got to a lower low and a higher high. So it, too, is not having the swing line in a trend. And that's why I call the Russell the poster child of a bull market. It just keeps it. Here's a market that is the complete opposite of them all, and it's in worse shape. If you take a look at the Russell now, with today's action, I'm going to be able to take this arrow that's here, move it up here, and have it point down. I want to show you how this works. So coming in today, this is what we looked like, and I felt I better leave this in place so I can show this. You now have a pattern where you got a lower low, a higher high here, and an outside day up, and that was at the close of business on Wednesday. My rule of thumb is that if you take out the low of an outside day up, which this was, you go to the nearest moving average if you've got the 100 and or the 18-day on the chart. Could even be a 50 that I look at, or the lower Bollinger Band if none of them are there. So if this number's taken out, it's a real bad sign. You took it out. Now, you didn't quite get there at the 1374 level. You missed it by 2 points, but I hope you get my drift here. This market's not doing what? It's no longer in an uptrend. It's in a downtrend. If I take this away, I've got lower highs, and now with this break low, a lower low, and I'm under the 18-day average of closes, and momentum is pointing down. The Russell entered bear market territory in the short term. When you come to the VIX, let's take a look at an opposite. Here is a market with a bearish embedded reading. Comes down, gets to the lowest low of the year, 956, closes higher, gets a little follow through on Wednesday, further follow through today, and lo and behold, that was Wednesday, you lose your embedded reading. Therefore, my objective, doesn't mean it has to be hit, is the 18-day average, and if that gives ground, you might even get up to the 100. What does that say about stock indices if the VIX is rising? Well, it's certainly not the best of bull signs. So that's one of the things you look at. When I come over to the 30-year bonds, I have embedded reading. I mentioned this yesterday. Now the market falls again today to the 100-day average. I would not be surprised if it makes a run during this break to the lower Bollinger Band. This market's in bear territory. When we come over to the ETF that is TLT, and this is, again, of longer-term dated treasuries, you got lower highs, lower lows, embedded reading. It's been fighting a battle at the 100-day average. If that gives ground, and there's every reason for it to do so, 119.50 is the next downside target. To lose this momentum in both the bonds and the TLT, you have to get the red line of the slow stochastic to close back over 20. In the June 10-year notes, you are just oversold. You don't have the necessary amount of days down yet under 20. You got one yesterday, but you need the day before. So you need 3 days. You don't have it. Tomorrow's an important day. But as you can see, oversold, momentum still down, trend down. If it continues to drop, maybe the lower Bollinger Band. We then get to the dollar index. And the dollar index came alive right here. This was last Friday. Embedded reading. Market's got a higher high, a lower low. If it continues down, you're looking for 97, 99.5. The market breaks down to a lower low, doesn't hit that number, and loses the embedded reading. When that happens, the first objective is the 18-day average of closes. That's what I look for. Doesn't mean it has to hit it every time. It does. So here you are on Tuesday. If the market keeps going, I then look for the closest of the 100-day average or the upper Bollinger Band, and this is what the market's working on. A problem for the market, and you got to throw this now in the equation, is you've entered overbought territory. When you get overbought, you don't have to make it all the way up. So I wouldn't be surprised to see spats of profit taking, as you saw today, starting to set in, as traders have caught a good trade up and maybe they want to take some money off the table. The flip-flop of this has been the euro currency. While I've got everything written over it, you can see that the numbers on the slow stochastic were in the 80s, and they'd been that way. So you had an embedded reading that all of a sudden has a big reversal day down. The very next day, you lose the embedded reading. That's Tuesday. I'll go back to Monday. On Monday, the numbers are still embedded. You lose it on the opening Tuesday, and it stays lost. That portends that we should be seeing a move towards the 18-day average of closes. You get there, and that's what you've done so far, but momentum is still pointing down. You are not trending. You've got a higher high and a lower low. You've got downside bias because you did close under the 18-day average. But when I see a market this close at that 18-day average after a move like this, often I'm looking for some consolidation of that, and that's what could be going on right now. British pound. I want you to see this. As of here, you have your embedded reading on Monday. Market's in a pattern that's looking pretty good. The market breaks down on Tuesday and loses its embedded reading. And as you can see, the settlement's 129.40, 128.58 is where you're at on the 18-day average. I'm assuming that unless the market has a big update, you're going to keep that embedded reading. I'm looking for price and the 18-day average to come together. Instead, on Wednesday, the market keeps its embedded reading, goes up 16 points, okay? And you're going to say, no, I don't think that's going to happen. And here's today's action. So it's the old adage, doesn't mean it always works, that momentum leads price. And I think that's very important. Japanese yen, you have an embedded reading and an outside day up, a key reversal, in fact. Why is it a key reversal? The whole leg of this came down, and this is the lowest low of the move. You took out the previous day's high, and you closed higher as well. If you take out today's low because of the embedded reading, I would view this as then a trap on the bulls, and I'd look for a break potentially down to the lower Bollinger Band. In order to tell me that this is any more than a bear market bounce, that's all it is, you have to lose the embedded reading, and it's showing no chance of it. No sign of it's a better word. Not chance, sign. When you come to the WTI crude oil, you have a pattern of higher lows, higher highs, like the other slow stochastics. I don't know why I became a doctor on slow stochastics, but it appears I've done it right now. You've got the loss of them, which tells me at least that if it doesn't re-embed right away, it's still in a bear trend. The odds strongly favor price and the 18-day average are about to make a run at each other. Instead, the market falls back the next day, but to me, this is the kiss of death for the bears. Just like we saw in that other market. You don't have it, you're going, nah, it's going down again. And this is what you've done since then. So you've got to learn how to work with those. Here's unleaded gasoline. The call here when you lost the embedded reading was to get back to the 18-day average. You're knocking on the door right now. Now I'm adding something for all you ETF people. And this is the USO ETF fund, USO, very popular amongst oil traders. And as you can see, lost the embedded reading. I'm looking for the market to get to 10.11. You know, if you like what I'm doing here, you're going to love my market research. And the reason is I'm not able by law to say you should buy here, sell there. I can talk these generalities. I think the market should make a run here. It often makes a run, blah, blah. But I'm able in this video, which is different than the one you're looking at, to go in the morning and prep you and throw out all kinds of trades for you in all these different vehicles. If you'd like to take a look at it, I'd like to make it available. And with it, I write reports, and you'll get those, and you'll get specific buy and sell recommendations. What do you have to lose? Should you decide to subscribe? Great. Let me tell you, I have a coupon right now that says IRA 20, and that's what you type in. If you type in IRA 20, you're going to get $20 off the first 30-day subscription. And no, folks, you're not committed to go days upon days or months after that. I do it that the subscription stays in place until you tell us to cancel it. No questions about it, then it's canceled. So if you'd like a 20-day trial, or if you've had my trial and now you want to come in, this is your chance at the discount price. Call us. If you go to our website at www.iraepstein.com, you're going to see the word research, Ira's Research. Click it. It'll say become a subscriber. Click that. There'll be an area that comes up for you. Type in the coupon code when asked, IRA20. That's the $20 off. You'll get it. You can also click up here if you'd want. You'll see on YouTube the icon right there. Click that coupon. That'll take you to that same form. It'll do the job for you. But underneath us, if you just want a trial and you're on different websites, well, the form under us is just for our free trials. It'll say click here for Ira's free offers. Talked too much in this particular video, but there was a lot to cover today. You have a great day.